freedom isn't the result of wealth. It's the foundation. Welcome to Wealth Independence, where freedom leads and real wealth follows through battle-tested strategies, hard-won lessons, and real-world experience. You'll discover how to accelerate your path to true financial independence. And now your hosts, Dustin Bailey and Adam Penn.
All right, welcome back to the Wealth Independence Podcast, where freedom leads and real wealth follows. I'm Dustin Bailey, and I am here with Adam Penn. Adam, how are you?
Doing well today. We've got. I feel like this is what comes to my mind every time you say it. But we've got deals going on, right? I just got a flip opportunity I'm going to go look at right after this. We closed out one deal. We're closing out another. We just had a call with a oil company we're looking to do a deal with. So just lots of things happening.
Lots of irons in the fire, or
that's
irons in the fire, as we would say around here.
Because we're blacksmiths. But you know what I did do over the weekend was I went to New Earth Market, and they have a little cafe in there, and I got an iced mocha. But because last time we were on this call, you had mentioned that you like the pumpkin spice.
Yes.
Which, did you know there's no pumpkin in that?
No. How do they get the pumpkin flavor?
It's not. It's just the spices. It's the spices that go into pumpkin pie. There's no pumpkin.
Interesting.
Yeah. Your brain just thinks there's pumpkin.
So it's just like cinnamon and
Nutmeg.
Probably
a little bit of allspice.
There has to. Okay. Interesting. No, I didn't know that. There's no actual. I'm not tasting pumpkin. It's just my brain tricking.
There's no pumpkin.
Okay.
Yeah. But
well, thank you for just ruining my fall.
I know. But I had them make it a pumpkin spice mocha.
Okay.
Ice mocha.
All right. So this is me showing my lack of knowledge here. So what is the difference between a pumpkin spice latte and a pumpkin spice mocha? Just the chocolate? Is that the cocoa or whatever it is that goes into a mocha?
It was chocolate powder. They pulled the shot, which was really watery. Like there was a lot. Me and Dustin really like coffee people, but there was a lot of water that came out into it. And then we should move on to talking about something
you borderline had an Americano then. A mocha Americano pumpkin spice. Well, okay. Well, here's the important question. Was it good?
It was pretty good.
Okay. Would you get it again?
Yeah. Okay. Better than the cappuccinos from that place because their espresso is not great.
Interesting. I will ask the next time I go to Starbucks. I'll ask them if they can do me a pumpkin spice mocha and see what they say. I'm sure they can do it. I just wonder what the reaction will be.
You should tell them you're pumpkin free and ask if it's okay to have it. Allergic to pumpkin. See if they know.
I'm trying to watch my pumpkin allergy.
See if they know.
I bet you they don't. They're like, we don't know. We just like pour the mix in and it's already done. We don't have any idea. Yeah. Maybe we should talk about what we're actually here to talk about instead of coffee. Although maybe that's a good idea for a second podcast. We should start a coffee podcast. I don't know how many episodes it would go, but
we could get Elizabeth Trusp on it.
We could. Coffee shop owner. She's definitely she's a coffee connoisseur. That'd be good.
She's primarily our asset protection attorney and a very well-known asset protection attorney, but she also owns a coffee shop.
That is true, and she's a big coffee aficionado just in general. So, well,
today we wanted to talk.
I know you said you've got an idea for something today.
Yeah, well, we wanted to do another No Investor Left Behind.
Oh,
I almost said every investor left behind, but yeah, No Investor Left Behind, and we were going to talk about RUBS. Which stands for Ratio Utility Billing System, I believe.
I think so.
I don't know if the system's on there.
That sounds right. It is system. Yeah.
Okay.
Yeah. And
what it means is, so let's just say you have you look at apartment buildings, and sometimes people are like, oh, we're going to implement RUBS, or is there RUBS on that building? And we have some kind of funny stories to tell maybe in a minute, but what it means is, like, let's say you have a 20-unit building and there's only one water meter. Well, if you're the landlord, you probably don't want to pay for their water, especially if you don't have to, right? Tenants are normally okay paying for their own water, but you can't just pay them all. You can't just bill all of them the bill, right? It's not, let's say the bill for a 20-unit building was $200 a month. It's not $200 per tenant. So how do you divide that? And some people just divide it evenly. Some people do it by square footage. One of the 20 units we have is all studios, and they're all the exact same square footage. So it's pretty easy to figure out probably water usage across those. It's probably pretty averaged if you just divided it by 20. I know some people that will do like, it's like a weighted average, right? So you get 100 points for having per bedroom, right? So if you got 2 bedrooms, you get 200 points, and then you get another 10 points for every occupant, right? So if you have a 2-bedroom with 6 occupants, you get 260 points. And so you're going to be hit a little more on the weighted average of the billing than someone with just 2 bedrooms, 1 occupant. And that's to just kind of divide it a little more evenly. I'll say from my experience on the few units we do, I don't like doing the ratio particular billing. It's kind of a pain in the behind. It is a lot of work. Every month you're having to go look at the bill and divide it and then do the math and then add the invoice to every tenant. And on a large building, it can take a lot of time, especially if you are self-managing it, or you're kind of doing. There's not staff on site dealing with it. It's not just another first of the month we deal with this type of thing. Long story short, what I've done on a lot of our larger buildings is just do a flat fee. So call it $40, right? I went and looked at the previous year's bill, total cost divided by the number of units, and kind of said, is this in standard with where water would be if I was living here and paying it? And I said, yeah. So I think I took 90% of the total and divided it. I'm not going to update it every year. I just added it as like a flat fee to their rent addendum. It pays for water and trash and sewer, and that's all covered. It's all covered inside of the agreement, and all the electricity and stuff is individually metered. So,
well, that's a good overview. I think we kind of dove into the weeds a little bit, but I think you hit on one of the main things. Like, people talk about RUBS, and it's like, talk about it as though it's like this one type of thing, right? And it's not, right? It's more or less just describing the fact that you take some sort of master metered utility and figure out a way to divide its usage among the units when you can't directly tell or attribute exactly how much usage went to each individual unit.
And something that's, one of the reasons you want to do this, right, especially on commercial buildings, is you want to increase the net operating income, NOI, right? And so, I'll give a quick example. If you just have 20 units and you can do it $40 per unit, then that's $800. Anyone watching can see my calculator. So 800 times 12 months, right? That's $9,600 a year. Normally, if you're going to increase rent or something, you're going to add some type of percentage of that's going to NOI, because a lot of it's going to get, there's going to be operating expenses. I'm going to argue that most RUBS probably isn't going to have very many operational costs associated with it. Yep. So let's just say that we get 90% of that as a bottom line NOI number. So it's $8,600 a year increase on NOI. And we talked about cap rate in the previous episode where we did No Investor Left Behind. So if we divide that by a 6% cap rate, it's $144,000 of value. So, you're like, well, I don't mind paying for water. It's just $40 a month per unit. It's fine. They already pay $1,000 a month or whatever it is.
Yep.
When you look at it, what the value of the building is, especially if you went to go sell it or refinance it, that's $10,000 a year of income. Even if it doesn't mean anything to you personally and you want to be a good landlord, could really affect the sales price. Are you willing to walk away from a refinance or a sale of an additional $140,000 of value?
Absolutely. And this is just, again, another illustration of the beauty of why I love commercial real estate, and what ultimately what was the big deciding factor for me that I wanted to focus on commercial over residential is simply this valuation, and the fact that there are opportunities like this where you can implement something with RUBS where there's really often not an associated cost. I mean, to your point, that's an additional revenue source that gets added on that is almost pure profit. Now, I think the thing to keep in mind with this is you have to always gauge that in, well, what's that going to do? How's that going to play in with the total of the total amount of the rent effectively that someone's paying, right? When their base rent plus RUBS, is that still in line? And so a lot of RUBS is very market dependent. There are markets that will support it. There are markets that won't. So to anybody listening to this thinking that I think a fair question to always ask any sponsor, if they're the part of the business plan and a lot of the value add is going to be implementing RUBS, you want to make sure the market supports that. Is that a common thing? Because if it's not, and they're not lowering rents to sort of compensate for that, then there's a decent chance that that plan might fail, right? That will then be a barrier to people wanting to lease those units, and then there'll be higher vacancies. So this isn't RUBS is great in markets where it works and where people expect it, and they just know they will see the advertised rent and they will expect there's going to be some additional charge for utilities or whatever it's called, but it's not a magic bullet in every single market all the time.
And I normally add it to the description, right? Like, hey, it's $850 rent and $45 a month for water, trash, and sewer.
Yep.
And they just know it. And it's just an addendum to the lease.
Yep.
Do we want to talk about maybe what to do if your property manager says they don't like RUBS or don't know about it? We took over a 20-unit building from a property manager that we were a little bit on the fence about. And in our onboarding email with taking over the property, they were a little standoffish, and I essentially had to show them like escrow closing docs to even prove that I owned the building, even though they went through the whole sales process with me. But anyway, that part's not the moral of the story. The property manager, who has hundreds of units, said, I'm not familiar with RUBS as we don't have any properties using this. Hundreds, if not 1,000 units. How is it set up? Can it be set up even through some leases don't expire? Which no, you would have to wait for the leases to expire. But there's a property manager who this is their profession, and they don't have a clue what it was. This is kind of similar when we say a CPA doesn't know what bonus depreciation is. You should probably replace them. If a large-scale property manager has never heard of RUBS and doesn't have the fortitude to go Google it before sending back an email, go ahead.
Yeah, that was a little eye-opening to me, especially, and I guess I could understand it if you had someone that was a property manager in a market where that's not common, right? Where there's often not some sort of utility bill back. But in a market where it is, and where it's pretty common, and they're not managing just like a handful of units, right? Like they've got a sizable portfolio that you would think they would have had exposure to this. So I think that was another thing that sort of prompted this for a no investor left behind topic. Was we're like, okay, if we got property managers out there that don't even know what this is, then this is for sure a thing that could confuse an investor. I think again, the big thing as a passive investor, this can be, this is always a good question to ask if you see this in a business plan or if you don't see it in a business plan. I've certainly seen before where some folks have asked, well, what about, like an investor has asked the sponsor, what about the possibility for utility bill back, meaning RUBS? And it's something that if the sponsor's not planning on it, then might be a missed opportunity, again, assuming the market can support it. And then that's sort of the other question. If they are planning on it, you want to make sure, okay, this is common in the market. It's not going to have a negative impact on vacancy, and it's not otherwise going to be detrimental, because it's very easy to just now in the pro forma underwrite a new line for, $10,000 a year, depending on the size of the property, additional income. And whether or not that's realistic, very much depends on the market and the marketing that the sponsor or their property manager is going to be doing for those units.
I also think that a lot of times on like unit turnover, a lot of times what we've done, especially if we're getting new tenants in there or renewing leases, a lot of times we'll buy buildings and they're month-to-month leases. We'll start signing year leases is, hey guys, just talk to the tenants. Hey guys, the previous owner was paying the water bill, but the new purchase price and property taxes are higher, blah, 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 blah. We're not going to be paying the water bill. Like, I leave it pretty simple. I don't even normally throw in a bunch of extra stuff unless they ask, but hey, previous property manager was footing the water bill, and we're just going to bill it out individually for everyone. But we looked at the last 12 months. This is the average. We're just going to do a flat bill. And people tend to be fairly receptive. I mean, it makes sense, right? It's a consumable. You're not adding a rent increase. You're not adding a line item. You're not saying, hey, we gave you this new dog park and we're going to charge you $100 a month for it. And they're like, I don't have a dog. I'm gone six months out of the year or something like that. They're like, oh yeah, water. I use that. I should pay for that.
Yeah, and especially if it's framed as like other things, right? Like you talk water, sewer, but then trash removal, right? Like that's always a big thing for an apartment building. So, yeah, I think it's not just something, people might, I guess the first time I was exposed to this, not having had a lot of experience in the space, it's like, well, wait a second, you're just going to tack this on and everybody's going to pay for it. And again, if that's sort of the expectation in the market, if let's say that current tenants haven't been paying it, but they know that if they moved anywhere else, they were going to have to, then yeah, it's a thing that's just expected within the market. It's not going to adversely impact vacancy, which is always the concern with either raising rents or adding on any additional fees that didn't previously exist. So I don't know, this one's fairly straightforward, but it's a thing that we definitely don't want to take for granted that people know or understand what it is. Then especially as a passive investor, kind of the questions to be asking the sponsor around it, and understand that yes, it's when you can find a property that has the opportunity to add it, it's pretty great, but it's not just always a given if it doesn't exist. There's a little bit more nuance than that.
Nope.
I don't know, Adam, you got any other thoughts on this one?
No, not a ton. I mean, like you said, when there's an opportunity to add it, it could be a value add that you're not even really thinking about, right? I mean, on day one of buying that last 20 unit, we were able to do RUBS on 17 of the 20 units. Once again, a lot of them weren't in leases, so that helped. Yeah. But 17 of the 20 units right off the bat, that's like $100,000 of value.
What was your turnover as a result of that?
No one said anything.
So it kind of illustrates the point, right?
Yeah.
That's great. Well, we will keep this one short. Again, no investor left behind. If you got topics or burning questions or anything you'd like to hear for a future one of these, reach out to us. Let us know. We got a contact form on the website, wealthindependencepod.com. And of course, if you're enjoying this, we would love for you to leave a review on Apple, give us a thumbs up on YouTube, positive comment, do all the stuff that lets the computers know you're enjoying the content here, and help us get the message out to more people. But with that, we'll get on out of here. We'll see everyone on the next one. Again, we appreciate you listening. Just remember, where freedom leads, where wealth follows. Thanks, y'all.
Thanks for joining us on Wealth Independence. This show is for informational purposes only and is not financial, investment, legal, or tax advice, and does not constitute an offer to buy or sell securities. All investments carry risk, and investors should always conduct thorough due diligence and consult with qualified professionals before investing. Until next time, remember, freedom leads and real wealth follows.